We are going to do things just slightly different this morning because we only have 7 members present. We will not have a quorum for both of our committee meetings. Therefore, we will go into committee of the whole for both our finance and our academic committee meetings. So I'll now turn it over to the finance committee and the chair, Dr. Kelly Erstein.
Good morning. The bond loan feasibility update begins on page 1-1 of your agenda book, if you're following. And so I would ask at this time, Mr. Fuller come and give background for this item. Thank you.
Good morning. Okay, the first item on the Finance Committee agenda is the bond and loan feasibility updates. This is an update that was requested from the coordinating board to be presented each year. It is of any bond or loan issues that have received coordinating board since last October. So it includes the actual date of the bond loan issue, the amount of the issue, and the loan or bond terms. There are those, the chart is included in your agenda book. There are not any, all of them came in under the approved loan interest rates or bond interest rates that were approved. Are there any questions? Okay. Agenda item number 2 is the report on the intercollegiate athletic revenue and expenses from this past fiscal year that ended June 30th. Arkansas Code directs the coordinating board to establish accounting standards and procedures for reporting of these revenues and expenses. For the 22-23 fiscal year, athletic expenditures for 4-year institutions was $242 million and $4.3 million for the 2-year colleges. This is a 12% increase over the prior year. We'll include that, with it still coming out of the pandemic, growth on expenses as well as rising costs for various things kind of contributes to that 12% growth from the prior year. The next slide is a breakdown of the revenues by the various sources. There are 2 separate columns of the funds, one including the University of Arkansas on the Fayetteville campus and one excluding them. They do have the majority of the numbers so that you can see the breakout. We'll add on the piece of this, the biggest question we only have is the transfers from the unrestricted E&G revenues, which are allowed by code. Those are restricted to up to 2% of an institution's E&G budget or a dollar amount set by the Division of Higher Ed. For this past year, that amount set by the division was $1,509,000 for the 4-year campuses and $170 per FTE for the 2-year campuses. On the 4-year campuses, 4 of the institutions did use the 2%, up to the 2% amount on there, so they would exceed that $1.5 million. And there were 4 that used the $1.5 million as their transfer limit. The next slide will be a breakdown of the various types in a color chart. Looks like, the TV went off air at the end of the day with the colors, but this is of 100% of their budget. It's the breakdown by color of the various either athletic generated income, athletic fees, the different revenues that are broken down on that. The next slide will be the expenditures broken down between personnel costs, scholarships, travel, game expenses, again broken out between all institutions, then all institutions excluding Fayetteville. And the next slide will be the same colorful chart based breakdown on the expenditures. Are there any questions on the athletic revenues or expenditures for 22-23?
Any questions for Mr. Fuller? Board?
Yes, if I may,
Mr.
Fuller, I see that actual expenditures varied from the Board of Trustees certified budgeted expenditures by a range of 12.8% below to 68.3% over the budgeted amount.
Yes, sir.
Am I reading that correctly?
Yes, sir.
68.3% over the budgeted amount for athletics?
Yes, sir.
And I'm just want to make sure I heard you correctly in your presentation that if you go over that budgeted amount, you're still capped on what you can take from
Yes.
E and G. And so that comes from athletic budget or increased revenues
Some kind
from
of-
athletics.
Yes,
Is that
some kind of
correct?
athletic generated revenue to cover that. And I will say a lot of that percentage that's so large comes from the smaller campuses that don't
Absolutely.
have such a large budget or expense on the 2-year side. That's what generates the bigger percentage fluctuations.
But any overages on your athletic budget,
Yes.
you're still capped.
Yes, sir.
It doesn't get to be made up from any E and G funds at all.
Right.
Thank you very much.
Thank you. Other questions? If not, I would entertain a motion to recommend to the full board the approval of the report on the intercollegiate athletic revenues and expenditures.
So moved.
Motion second.
Second.
Any other discussion? All in favor, say aye.
Aye.
All opposed? Thank you. Motion passes. At this time, we're going to skip to agenda item number 3 and do number 4 first, correct?
Yes, sir. I believe agenda item 4 will help explain item 3. I apologize for getting the numbers out of order in the initial table of contents. But agenda item number 4 being presented to you is the productivity-based funding distribution for fiscal year 2025 that will begin next July. This will be the 7th year of the productivity funding model. Metrics are based off of academic years 2019 to 21 for the baseline, with comparative metrics based on academic year 2020 through 2022. Overall productivity for this time period was a decrease of 0.14%, which is the first time in the 7 years of this model that we've had an overall decrease. So that results in a recommendation of 0% of new funding to be distributed to the institutions. As part of the distribution policy, the Division of Higher Education and the Coordinating Board will not recommend less overall funding for institutions of higher ed than what was recommended in prior years, but there is a piece of that funding that was dedicated for one-time funding for last year that's over the 2% that can be included in their base. This is 4.55 million for the next year, and that is recommended to be utilized for statewide purposes for fiscal 25 as directed in our funding distribution policy. You see on the next slide is a breakdown of that negative 0.14%. And again, with that negative amount, we do not recommend new funding to the institutions. The reallocation piece that still gets reallocated from institutions with negative productivity to the institutions with positive, that is still in effect in the distribution policy. So you will see that on the next few slides. First one here is the chart for the 4-year institutions. You can see the reduction of the 3.8 million in incentive funding from the current year. Then the reallocation of the percentages from those with negative productivity to the one institution that had positive for the calculation. And then on the 2 years, we have a total of 706,000 of that incentive funding that would be reduced. And then a reallocation of $950,000 between the 2-year institutions. Again, those reallocations are split between the sectors. The 4 years only get reallocated to other 4-year institutions, and 2 years get reallocated to other 2 years. So we're not taking from one sector and giving to the other. So overall, we again will still have the total recommendation for funding that was recommended for fiscal 24 will be recommended for funding for institutions for 25. There will just be the 4.5 million that will be utilized for statewide purposes. Is there any questions on that?
Any questions for Mr. Fuller? Okay,
If I may,
please.
is this the first year we've had this negative since we put in this
Yes, sir.
productivity model?
Yes, the first 6 years were all positive, and I believe the first 2 years were held harmless on the reallocations.
That's
from
right.
negatives.
I remember
So-
that. So first year we've been negative, which means we're not going to make a recommendation for any
do.
increase in funding.
Yes, sir.
But I'm right, by policy, just because we're negative, we will never recommend
Less.
a decrease.
Yes, sir. And that's where you see on this slide here, that box that says funding for statewide purposes, that 4.5 million, that'll be a 1-year allocation for the statewide usage that will then be available if we're positive next year, that we can distribute new funding to the institutions if we have an overall positive number again for 26.
And the methodology for that distribution comes from
For which
the
distribution?
4.5.
The 4.5. That
Yes,
has not been developed yet. What statewide purpose it'll be used for?
but a statewide purpose.
Yes, it should be utilized to help everyone, not any individual institution.
Thank you, sir.
Yes, sir.
Other questions? If not, I would entertain a motion to recommend to this entire board the approval of the recommendations for the distribution of the productivity funding for the state-supported institutions.
So moved.
Motion made, second. A motion second. Any other further discussion? If not, all in favor, say aye. All opposed, motion passes. Thank you. Mr. Fuller.
And then the next item will be the recommendation for the operating budgets for state revenues for fiscal 24-25. And this is based off of the productivity recommendation that you just approved, and as well as including current estimates for Educational Excellence Trust Fund and Workforce 2000 funding. For non-formula entities, which are not a part of the productivity recommendation, those are based off of the second year recommendations that were approved last year going into the biennium. As well as the total funding recommendation, ADHE is proposing an additional 2% spending authority increase above the funding level to account for any fluctuations that might occur with the other revenues, namely the Educational Excellence Trust Fund. With this basing it off of current year forecast, there is the possibility that it increases, which it has over the past few years every year. So the 2% spending authority increase above the funding level would account for that and not require us to go back to the legislature for additional spending authority after the initial recommendation. You can see on the first chart here on table 3A is the summary of these recommendations for the total funding. See, for institutions, for universities and colleges, it's $678 million, but then the productivity model, and then 281 million on the non-formula entities. Table 3B is the 4-year recommendations. You will see we include beyond the productivity funding or the RSA forecast, there is Educational Excellence Trust Fund and Workforce 2000 funding to create the total funding recommendation. And then above that is that 2% adjustment to the spending authority. Again, that 2% adjustment column is not funding. There's no funds tied to that. That is just spending authority above the funding recommendation. Then for the 2-year institutions, there's a total of 181 million. And then on the non-formula entities, take the base. There is a recommendation for each of the programs that are currently funded for a 7% increase based on the CPI in funding, and then additional program or operations enhancements at the request of each program that were made last year, that were presented as the second year request in that non-formula request that was presented in the prior year. And the last chart is the UAMS for the healthcare related non-formula. Any questions on the operating recommendations?
Board, any questions for Mr. Fuller? Anyone? If not, I would entertain a motion to recommend to the full board the approval of the recommendations for the educational and general operations for the state-supported institutions.
So moved.
Motion's been made. Second?
Second.
second by Mr. Eden. Any other discussion? If not, all in favor, say aye. All opposed, motion passes. Thank you, Mr. Fuller. I would entertain a motion to adjourn.
So move.
Mr. Eden has made the motion. Second? Second by Mr. Brodell. All in favor, say aye. All opposed, motion passes. Thank you.